So today I want to share with you guys some secrets about how you can own a business without actually having to run a business. So let's dive into it. Stocks. So most of you guys have heard a little bit about stocks, probably from a friend or a coworker. Maybe you guys have done some research on the internet, but not a lot of people know or understand, why stocks are created, how they're created, why people invest into them, and some of the benefits that can come from investing in stocks. So, just a little bit of history. Back in the late 1700s, there were a group of U.S. merchants that got together and they formed what was called the Buttonwood Tree Agreement. This actually allowed those U.S. merchants to go and buy and sell stocks and bonds of the companies they had. And what that allowed them to do is allow them to essentially raise capital for their businesses so they can scale their businesses, but it also allowed people to participate in the wealth that was created for those businesses as well too. So that was essentially the precursor to what we now know as the New York Stock Exchange. So for you guys who don't really understand what a stock is, a stock essentially represents a share of ownership in the company and also gives you a claim to their assets and earnings. So when the value of a business goes up or down, that share price of that stock is also going to go up or down. And nowadays, it's not like it was back in the 1700s. Nowadays, stocks are actually traded electronically on exchanges like the New York Stock Exchange or the NASDAQ, which is the National Association of Security Dealers. So it's really important to understand that when you are investing in stocks, you are putting your money at risk because there is no guarantee that that stock's going to go up or it's going to go down in value. And also, some stocks may pay dividends as well too, but again, those dividends are not going to be guaranteed. But really intelligent investors understand that stocks do play an important part in their portfolio. Some of the benefits that they have is that they do have a higher potential for growth and higher returns than other financial tools. Also, some people will invest in stocks in order to earn income from the dividends that they get. And you may also hear about traders as well too. What traders are trying to do is they're trying to profit from short-term stock price movements in the market as well. So when an experienced investor is looking at a stock, typically they're going to use a few different techniques to go through and analyze a stock, and those can be like quantitative or qualitative techniques. Some of them are fundamental analysis. That's like you going in and looking at 10K reports, understanding what that CEO does, or understanding what the market perception of the stock is, looking at their earning reports, things like that. Or you could just do more of a technical analysis, and that's just you looking at stock charts, understanding the various patterns that these stock prices have as well too. But for most new investors, it's usually more of an emotional decision. They're usually taking a recommendation from their best friend, their coworker, their parents, or maybe even hearing that random guy on YouTube about what they should ideally purchase. Not always the best way to go and purchase stocks. So the biggest thing is that you do want to be educated when you are investing, and making sure that you're talking to a professional, of course. And lastly, when it comes to stocks, there are also different types. Most people actually think about common stocks, but there are also things such as preferred stocks and ADRs, which are American Depository Receipts. So I hope this video was helpful. Again, if you're thinking about investing, it's always important to understand what you're investing in before you actually invest. So, talk to your financial professional, or feel free to reach out to us if you have any questions. And definitely hope you guys were able to learn a little bit more about stocks and how you can start more efficiently building your wealth in the future.